Your heart's not really into the bond trade in the U.S. at the moment, though. You are more looking towards U.S. equities. And we put together a chart, GTV Go, for our clients that shows what's been happening with the S&P 500. Evercore has also weighed in. They're saying the S&P 500 is headed for new highs. What exactly in U.S. stocks is it that attracts you at the moment, given the lofty valuations?
Yeah, I mean, they're clearly not cheap, but they're not extraordinarily expensive. And if you do see the earnings momentum coming through, obviously that's to a significant extent from the tax cuts. But we are expecting second-order effects of those tax cuts to feed through into the economy. And if the Fed does keep going in a relatively gradual manner as we expect, so yes, another hike in September, fully priced, and maybe another one in December, and 2 to 3, probably 3 next year as well. But that all suggests that the overall environment is still pretty healthy for US corporates. So, against that backdrop and the tech leadership still very much in vogue in our opinion, that suggests that the US market will not only do well in absolute returns, but also on a relative basis as well, relative to other regions.
So where in US stocks would you allocate most of clients' assets? Tech, you like tech, don't you?
We do like tech. Obviously, you talked about valuations earlier. That is one area that is becoming quite elevated. So we wouldn't certainly be adding massively to tech. We're overweight and we still like that position, but not really wanting to chase it excessively at this point, given those valuations and very strong momentum we've seen. So we would be looking at other areas as well. So financials, I think, if you like the theme of rising interest rates coming through, we see that as very good, obviously, for the banks. And we've seen banks' performance starting to pick up again. And just one thing, we've seen the defensive sectors do very well so far this year on the back of trade tensions. That's probably not an area to chase at this stage, given that we probably see that as largely a temporary area. So we prefer the cyclical areas of the market rather than the defensives.
What about any contrarian trades out there? If you had to enter into any exotic undertaking, what would it be, given everything we've discussed?
Yeah, I think it probably wasn't contrarian at the beginning of the year, but it certainly seems to be contrarian now. We do see increased value, as we mentioned earlier, in emerging market. If you want to be really contrarian, I think the emerging market local currency bonds look very interesting. It's not an area that we're signaling to our clients today that is very attractive at this point, but as a high risk strategy, having some there probably makes sense.